Welcome back. Shifting focus now to global trade. The United States has announced a trade deal with Vietnam and said that it will levy a 20% tariff on Vietnamese goods sent to the US. Now, to discuss the impact of this deal on India, Pallab Banerjee, the Managing Director and Group President at Pearl Global Industries, is joining us. Mr. Banerjee, good morning. Thank you for joining in. What do you make of this deal? How does it benefit you as a company, considering the fact that you have quite a few manufacturing facilities in Vietnam? Is this a positive for you, or will it still result in an incremental increase in costs because the tariffs are still gone higher from 10 to 20%?
Thank you. Thank you, first of all, for having me on this call. Yes, I think Vietnam is looking at it very positively. From a 46% initial number that President Trump had spoken about, it has come down to 20%. And keep in mind that what's happening is China is at a much higher percentage of tariff at this point of time. So what happens is what Vietnam is looking into, a lot of shift that might happen from China into the Vietnam in terms of the apparel manufacturing. And yes, Pearl Global being having a significant presence in Vietnam, we are looking at it very positively. And of course, we are seeing a huge amount of interest from our buyers who are looking to book this capacity and place more orders with us.
Okay. Mr. Banerjee, just to follow up on that, when you say you have a significant presence in Vietnam, what is the percentage of revenues that come in from Vietnam? And while the tariffs are lower than China, but they are still increased from the previous levels, right? So what kind of impact would that have on the P&L? You will see more order inquiries coming by, but still the tariffs are higher. So if you can tell us what could the impact be there in terms of cost?
So, see, the kind of apparel which is made in countries like China and Vietnam, the segment that we are in is much more value addition, much more strategic in terms of the customers that we are supplying to at a higher portion of the pyramid, if you talk of the product pyramid that we supply to. So, yes, there is at this point of time, if you see from the MFN, the tariffs were at a level of 17% for average for cotton products and 26% for synthetic product. And so far, the MFN still continues to stay. And this 20% tariff, which I think President Trump has spoken about, is something like which will be in addition to that. So yes, that means there could be more tariff for the retailers and the brands who are importing goods from Vietnam into US. But keeping in mind the whole deal that has been discussed since April, it is valid for all the countries. The lowest that we have seen is 10%, a baseline tariff that US has spoken about, and the highest have been in the 60s. So if you look at the whole spectrum, 20 seems to be quite reasonable. And that's where I think the industry celebrated. Because if you remember, a majority of garment exports, almost about $40 billion plus, is garments is getting exported from Vietnam into US. The dependency on the brands and the retailers in US for countries like Vietnam and China or Bangladesh is very, very high at this point of time. So keeping that in mind, it's a good deal. That's why most of the brands, if you saw their market valuation went up after this information came into the market.
What does that do to you as a company, Mr. Banerjee? How much of your overall business comes from the Vietnamese market? And with this deal, have you analyzed it would benefit your top line, bottom line margins in a particular way, or you yet to come up with that number?
So yes, the details of the deal would be more clear on the next few days, I guess. What has happened now at this point of time, our business, our total top line, almost about approximately anywhere between 15 to 18% is coming from Vietnam. And what we have seen with all this deal and whatever was going on, the whole China exodus that has been really accelerated in this last few months, that had seen that quite a huge amount of interest for these buyers. for that particular segment of product that we are talking about, what we manufacture in Vietnam, that has gone up significantly. So yes, the order books are looking quite good, quite strong for the rest of the year. In fact, we are almost booked for the rest of full year in Vietnam. So that's a positive sign. In terms of the bottom line that you're talking about, yes, some of the retailers had come back to us asking for some kind of burden share or the tariff burden, the extra tariff that they have been paying, this 10%. They wanted to share certain of the burdens with us, which is a part of a negotiation. So we negotiated the kind of a smaller amount to do that. And also the apparel, what happens is quarterly. US negotiates and places business every quarter. The price fixation is happening every quarter. So that means you can really negotiate and build some of this negotiated price or whatever you are giving to the customer that can be worked on between us.
Okay. So, Mr. Banerjee, since you're saying you're fully booked in Vietnam, will that also mean that more capacities could be added there? And considering that it has come in as a tariff relief, the Capex that you had planned on Bangladesh and India, could you move some of it to Vietnam?
So we have already had planned a Capex in Vietnam as well, and we have been working on it. So that's getting captured. That means like already our capacity has gone up by high double digits, like almost 25-30%. We have been already working on that. So that's something we had factored in, that this kind of movement is possible, and we have been ready for it.
Now, Mr. Banerjee, to take this point further, now with this, the other bit that was signed other than this trade deal was the UK FTA that India had signed. Now, that reduces the textile import duty from around about 8 to 12% to 0. Now, how does that benefit you as a company? Would this be a bigger positive for you compared to the trade deal that has been signed with Vietnam?
Comparatively, UK is a much smaller market if you compare with US. So US is almost, I would say, significantly, I think 6 times bigger than the UK market that we are talking about. And so, yes, there is an advantage both in India. India, I think, as we are waiting anxiously for the next, I hope, 24 or 48 hours, or maybe till Monday, about the deal with the US and India, that would definitely move the needle significantly if it's a favorable deal for us. But yes, UK has been a positive step. Definitely, it will grow the Indian potential more. But I think the Vietnam one, the exodus that is going to happen from China into Vietnam, that will be much more significant and much bigger.
Okay, we get that point. So we never know how things change when it comes to trade deals and tariffs, right? So it continues to be in a wait and watch mode. Mr. Banerjee, thank you so much for joining us and telling us what this tariff in Vietnam means for the industry and a company like yourself as well. But with that, we'll slip into a break. But remember to tune into all new CNBC TV18 Prime, bringing you insights from policymakers, business leaders and economists shaping both the world and India's future. CNBC TV18 Prime decodes global shifts and their impact on Indian businesses, giving you unparalleled insights. Tune into CNBC TV18 Prime at 12 noon for the Global Reset, at 1 p.m. for the Big C and Global Lens at 8:30 p.m.